Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. October is officially upon us. It's now October 3rd, and that means we're starting to see monthly production reports for the month of September. We're going to be comparing, contrasting, analyzing results from CleanSpark, Mara, and Riot in today's presentation. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below which of these three heavy hitters is your favorite and why. With that being said, let's get into today's video. Okie doke, guys. Friday afternoon, another successful trading week. Bitcoin is breaking through really some psychological barriers here. 120,000 earlier in the week, 121, 122, 123 today. It topped out just shy of 124,000, but October definitely living up to its name.
Absolutely. We've talked about this probably on every podcast this week about, the chances of reaching that all-time high in the next sort of 4 or 5 days, more than likely going to happen. It was $700 away from today, but we've got the weekend. Yes, not as much activity the weekend, but come Sunday evening when Asia go back online, the market's open, we always see a little bit of activity with the Bitcoin then. So maybe on Monday, we get an all-time high, but really, really close today. It was literally motoring through the numbers you quoted there, and I was surprised it stopped. We've seen this happen before, and it gets to the all-time high, and then it pulls back, but a little bit before then. Maybe people are getting a bit cleverer there. They're putting in their targets for sales just below the all-time high, knowing that they'll get activated, rather than trying to put a sell in above the all-time high, which might not get activated. So maybe we've got some clever investors out there, but as for you and me, Bryce, we ain't selling any Bitcoin at the moment. In fact, only last week I bought some Bitcoin, so I'm still adding to the pot and grateful for the rise this week.
Yeah, still adding to Bitcoin. We are trimming from some minor positions and profits. We are highlighting those in our members only videos or channel membership videos. You guys can take a look if you'd like some behind the scenes access, so to speak. Now, the miners themselves, you talk about motoring. These guys are driving with 93 octane right now, Anthony. They've really hit their stride in terms of the HPC AI re-rate. We've seen Bitcoin really adding to strength here. We've seen the retail community come back into the space, some big hedge fund names, a lot of excitement in the space. Now, it is Friday. We know there's some option trading going on. We know there's some profit taking. The miners were up quite substantially this morning, many of them in the double-digit range. They have pulled back now slightly alongside Bitcoin, kind of a split bag, so to speak, to finish out the week here.
Yeah, there was significant green across the board in pre-market as that price was starting to rise, the Bitcoin price there. And we were just wondering when it was going to stop, because it was literally every 10 minutes you looked at the numbers and they were changing. Now, if you look at the day range there for all the miners, you can see they're pretty much, most of them now are at their sort of like lowest for the days. When in theory, a few of them have been significantly higher. I mean, look at IREN, it's 49.66. That's up 5.6%. However, it was as high as $52.19. So nearly another more than $2.50 from where it is now, higher. So that's sort of pullback there. In terms of volumes, again, we're seeing these big volumes. Cipher, 55 million. That's 17 million more than its average volume on a 3-month basis. CleanSpark's over its 3-month, and we're only talking like 3 or 4 hours into trading here. Literally every miner, Bitfarms again, 53 million shares traded. Hive having a great day as well in terms of their shares traded. They're nearly double their normal daily volume. And so, we've seen this, this week, we've seen a lot of this, volume, and maybe some like retail coming back into the space. We've noticed that obviously from the views on the podcast starting to increase. So we've seen maybe a shift of people coming back into space, looking to try and see if they can jump on this bandwagon. But bear in mind, I said before, if you'd have picked out 3 of these mining stocks at the start of the year, and any 3, go to a dartboard, put the miners' names around the dartboard, throw 3 darts, and put the money on those 3 darts, you'd have been sitting on some nice profits now. Literally, some of these companies are up 500% in the last 12 months. It's just amazing.
They certainly are. We're going to look at one next up. Now, You mentioned people coming back to the space. That's why we say welcome or welcome back in the intro. This is a volatile space, and some people maybe don't have the stomach to tough it out in the downtrends. We've been here, ups, downs, everything in the middle for 4 years, Anthony, reporting on these miners, and it's so nice to see some of this work paying off. Case in point, IREN Limited, you guys, we were buying this in the single digits, $3, $4, $5 range. I know in my personal account, you just mentioned they surpassed $52 in intraday trading today. Incredible to see the rise, 6 month return in excess of 720%.
Absolutely. I was buying iron back in 2023, 2024, and paying not much more than $1, $1.50 for some of the trades there. Wasn't buying a great deal because iron when it IPO was I think $24.50. So share had come down significantly when during that bear cycle. But I covered iron since it IPO'd, and the numbers monthly just didn't stack up with the share price dropping down there. And if anyone goes back and looks at my sort of 4 year analysis on all the miners and look at those comparison tables, which every quarter I used to put out there based on, the financial results, operational results, generally, I'm going to say 90% of the time, iron came out top. And it's proven to be really true. I've stuck by that, and it's not by saying, "Oh, you're just pumping the stock." I'm not. I've drawn out there. The numbers speak for themselves. I don't make the numbers up. The numbers are there. The financial numbers, the operational numbers. If that's what they put out in their updates, that's what I use. And we've been in this space a long time. It's great to see there's a number of people coming into space now and doing probably even more analysis on iron than I'm doing, and we've got people prepared to spend money on having satellite imaging done of the company and their sites and noticing when every shovel gets moved, and that's going to a level I'm not prepared to go to at the moment. We're covering like 15 or 16 miners. If I was focusing on one miner, maybe I could do a lot more, but I try and cover all the miners. But iron certainly has been a consistent miner. I can't remember if it ever had a bad monthly update in all that 4 years since I've been covering it. Some miners have the occasional bad month. They've had to turn off machines. They've had machines that were faulty. Iron's had a few issues in the fact that it handed back its machines to NIDIG, but that wasn't an operational update. That was a financial decision, and now that's all under the bridge now, and they've moved on. But 99% of the time in the last 4 years, it's been nothing but consistency for iron, and we're seeing that in the stock price today. I must admit, I am sort of like, looking at that price now and thinking, as you rightly say at the start of the conversation, Bryce, this stock was in the $5 range in April, and it's in the $50 range today. That takes a little bit of getting used to and understanding. But if you've been following the channel for as long as we've been providing it, and you've listened to some of the podcasts we've done, you'll know that iron has been mentioned numerous times for its consistency and for the fact that it achieves its targets, whether it be hash rate, whether it be GPUs getting installed. It's meeting every target, and I expect this company to deliver more and more as we go forward.
As do I. And we've had the pleasure of having Dan Roberts on the channel a number of times. We've met Will as well. These guys are a rock star team, and they do deliver on every single commitment that they make. I know Dan was on TV last night talking about that consistent track record, and the market is really rewarding them. So let's just take a pause, hit the like button if you guys are holding iron, and let us know your average cost in the comment section below. We'd be curious to see kind of when you got involved with this story, if you're on the iron bandwagon, so to speak. Now, the other one we wanted to talk about quickly, Riot. Again, we've had the pleasure of touring this facility last year. We're going down in a few weeks to see Corsicana once again. They surpassed $20 in intraday trading, so nice to see some market cap appreciation for Riot as well. They have pulled back slightly, as we just alluded to, but this is another one we're both really excited about. Really haven't had a lot of press releases or headlines recently, assuming the team's been hard at work.
Yeah, I'm hoping they've been hard at work because they've got 600 megawatts at Corsicana, which is going to be an ideal site with all the extra land they've purchased, with the water there, with the fiber. Everything stacks towards, a co-location deal with one of the big names that we've seen, create contracts with other miners out there. I don't think it'll be too long before we hear from Jason and the team saying they're going to announce something. And even if you look at the Rockdale facility, I mean, I'm still amazed at the photographs they show that one there, because that one looks like it's getting carved out, ready for high performance compute. Look at the land there; they've done a lot of work there, when really they didn't have to. I mean, they've got 700 megawatts. They've got the facilities for 700 megawatts of miners' machine. They could keep mining there, but what they're going to do there is they're going to put miners in to replace the miners that Rhodium stop using, and they're going to grow that cash flow, and they're going to have maybe 2 to 2.5 years time they're going to have a HPC contract there as well. So they've got a significant amount of power. I only think, again, like IREN, good things will happen to Riot. They've had a few roadblocks in the way over the last few years. They had some faulty machines which they came clean on and then changed their supply to micro BT. Those machines are working really well at Corsicana. We spoke to Jason on the podcast recently. He concurred that they're getting a good return there. Their updates this year have them as a top miner in the space this year on a monthly basis. So they've done something right. There's something in the water that they're doing okay, and the stock price is starting to reflect that. Yes, they had that teething problem going after Bitfarms, which didn't really get to where they wanted to. And it wasn't a case of Bitfarms were a bad company to invest in. It was just a case of, I think, public sentiment was effectively against them, and they sold their stock. They're focusing using that money now to drive HPC, and the stock price is getting to where it needs to be. This company is the second largest company in terms of market cap behind IREN, and you weren't saying that too long ago.
You certainly weren't. And yeah, we expect big things from Jason and the rest of the team down in Texas. The other one we wanted to give a call out or notable mention to, Bitdeer Technologies, again, surpassing $20 in intraday trading. They had a very strong Q4 in 2024. They've fallen off in terms of share price a little bit this year, so potentially a buying opportunity. We're very bullish on them, very bullish on the Seal miner, and really this global portfolio or pipeline they have under the hood.
I like Bitdeer in the terms that they are, they've got sites in many, many continents. So they don't have the issue that some of the North American miners have with regards to maybe tariff issues in the future. Bitdeer also have that advantage that they're building their own machine. So you don't have to go to a Bitmain or a MicroBT or a Canaan. They're building their own machines. And remember, for those that don't know, Bitdeer, the CEO, Jihan Wu, was the co-founder of Bitmain. And so Bitdeer, is effectively formed from that Bitmain, from the breakaway from the Bitmain company. And Jihan managed to take a significant amount of the R&D staff, and they've been working hard over the last 3 or 4 years developing machines, and they've already released to 3 models in the last 12 months: the A1, the A2, and now the A3 Seal miner, which has at the moment the lowest or the best efficiency out there on the market. And the great thing is, if they don't sell those machines, which if they do, they make a nice profit. They put those machines in their facilities and they mine Bitcoin at a machine that has probably a repayment period of about 8 months. And if you compare that to what miners are having to pay for machines from other suppliers, that's probably about half the time. So it's a great business model for Bitdeer. I expect this hash rate again will go up in when we receive their update for September. They're already over 30 exahash, and that's got up massively this year. Only Hive, I think, in terms of percentage increase, can outplay Bitdeer this year. Both companies have been exceptional, and I expect Bitdeer's hash rate to get to that target of 40 by the end of the year and surpass it.
As do I. Yeah, an exciting opportunity there. And I just can't stress enough how impressed I am with those 3 iterations of the Seal miner. That would be equivalent to Apple bringing out 3 iterations of the iPhone with double-digit efficiency improvements on each iteration. So just incredible. Big fan of what Bitdeer is doing, and excited to see that one continue to grow. Now, in terms of operational updates, I mentioned in the intro, it's the 3rd of October. We have 3 updates for you, really from some of the big hitters or heavy hitters in the space. We're going to go through each one individually. Then you've got one of your comparative tables, and we've got a few interesting metrics we wanted to draw your attention to. So first and foremost here, Riot Platforms. We just talked about their pipeline, their HPC AI endeavors. In terms of Bitcoin mining, what stood out for you in the month of September?
Yeah, I mean, again, it's the Bitcoin mine for me. I mean, they're really hitting the targets that they should be hitting. Yes, it's less than August, but bear in mind September is actually one day less, and that accounts for about 3% of the difference. And then we had that, we've had 2 difficulty drops of over 5% in the last 2 weeks there, so that doesn't help miners at all there. So again. I think the difficulty drop was about just over 5% 2 weeks ago. So that's also going to impact on production. In terms of power sales, I mean, look at August there, the hottest month of the year. They were able to achieve the equivalent of 149 Bitcoin when the price was about $108,000 a coin in terms of credits that they're going to receive on future energy bills. In September, we know from speaking with a number of analysts and people who have facilities in Texas that the weather was not as severe as maybe a normal September month, and there was less curtailment. And therefore, if there's less curtailment, it means that you're actually being able to mine more production. So actually, the expectation, if you think about a day less and the equivalent of the difficulty, Riot have actually mined more than expected in terms of that. Now, their operational hash rate increased from 31.4 to 32.2. That's the amount of machines that are working, regularly during the period. Their installed hash rate also slightly increased from 36.4 to 36.5. It's still got a little bit to go to get to their target, but they're very, very close to that. In terms of operational power at the 3 sites, we're looking at about 1.26 gigawatts of power. Now, on the downside in September, and this will affect quite a few miners out there that have the market rate, the blended power rate has increased from 2.6 cents a kilowatt hour to 4.2 cents. Now, the first thing you've got to realize is the power sales would have helped the August power cost. That would have been taken into account for that period. So, 149 Bitcoin equivalent in August, only 13 in September. The power cost is going to be higher. It is a 62% increase, but actually, even at 4.2 cents a kilowatt hour, it's still a good rate for a company like Riot, who have a fleet efficiency of 20.5. That's dropped by 2%, so they'll still be able to make good margins. In terms of selling Bitcoin, they sold 465. I think this is the first time, people prove me wrong in the comments, but I think this is the first time that Riot have actually sold more than their production in a month since I've been covering them. They've always managed to sort of like sell Bitcoin regularly, but they always managed to add a bit to their hodl. So this particular month, they sold 20 more than they produced, and their hodl's gone down to 19,287. I say that with bated breath because that valuation of that hodl there is still well over close to 2.1 billion. And actually, even though they've sold some Bitcoin, the valuation is so close to what it was in the previous month there, not very much between them at all. Now, we always like to look at the hodl value to market capitalization. The hodl value for September is down to 31% as opposed to 40% in August. The main reason for that is that Riot share price has been doing really well. So the market capitalization has been increasing at a faster rate than the price of Bitcoin. And that's what you're going to notice with quite a few of the miners as well. Share prices have been doing really well. We looked yesterday at the live miner data, which covers a number of periods. And if you looked at the monthly performance for most of these miners, there was quite a few miners heading up towards 100% increase in the month. And so, that helps market capitalization. But we know Bitcoin price hasn't increased. It may have increased by 7 or 8% in the month. So market values are increasing at a faster rate. Hence that drop there to 31%. But I would say overall, another solid month from Riot.
Good looking month, in my opinion, as well. And we talked about that market cap phenomenon yesterday in the video as it relates to HODL percent market cap. So make sure you check that one out. Another very interesting metric. And we use that to really identify DMG and Mara as potential breakout candidates as well. Now, another stock we've been watching closely, CleanSpark. They've been talking about this pivot to HPC AI. Matt's been giving some breadcrumbs. We haven't really heard anything definitive yet in terms of where or when this could take place. We have heard some good things about their Atlanta, Georgia sites. In terms of the Bitcoin mining, again, a fairly strong month here. Managed to get their operational hash rate up closer to that 50 total plugged in hash rate. And again, consistency comes to mind.
Yeah, I mean, again, like Riot, you have to put CleanSpark and in that bracket with with Riot and IREN this year. They're the three most consistent mining companies out there. Bitcoin mine was only 4% down. Bear in mind again, it's a 30-day month, so 629 mine this month as opposed to 657. They, like you say, they're getting close to that operational hash rate of of 50 exahash. It's at 45.6. That increased 5% from the previous month there. Operational power just over 1 gigawatt. Efficiency the second best in the market. Only IREN can actually have a low efficiency than these. They're at 15. And again, CleanSpark this year have been selling a proportion of their Bitcoin, not selling all of it, a proportion of it. So they sold 444, nearly 445 Bitcoin, added to the HODL, which now stands at 13,011, so over the 13,000 mark. That's got a valuation of 1.484 billion as opposed to 1.388 billion the previous month there. But if you look at the Bitcoin HODL value to market capitalization, 52% their HODL value was worth in August. It's down to 35. The same reason again for Riot. CleanSpark share price has done well in recent weeks, especially. They had a change in CEO, a change in direction, although they've not really given anything to the market in terms of what that HPC looked like. But the fact that they are willing to look at the opportunity of HPC, I think the market believes they may have some sites or they may have opportunities to get some sites. They have a significant HODL there, 1.5 billion. That's a nice treasury position to be in if you're going to move into an industry that is very much capital intensive. Bear in mind, TeraWulf have already got 2-3 deals in the HPC world. They don't have any HODL at all. They've had to go and get convertible notes. CleanSpark have got 1.5 billion before they start. So, if they go out there and do something, maybe they can, get things there maybe a little bit quicker than some of the peer miners.
Yeah, good point there. Now, next up, we have Mara. This is a unique miner in the sense that they run their own pool. So you can see they highlight 218 blocks for the month. This was a fairly strong month overall for Mara. Another one that's been pretty quiet in terms of headlines, specifically around HPC AI. We know there were some developments in Europe recently, but haven't heard a lot since. They also highlight the transaction fee as a percent of total. Coming in at 0.9. Now, we're going to talk about the hash rate index a little bit later, but transaction fees, although we're seeing Bitcoin price go up, still remaining quite low along with hash price. So we'll talk about that in a second. However, in terms of September mining for Mara, 736 Bitcoin, very solid month.
Yeah, no, a good month, and one of the reasons they managed to achieve more Bitcoin than they did in August is because they've managed to get their sites a lot more higher in utilization. I mean, some of their sites are operating at 99% now, so that's increased their ability. Bear in mind, again, September wasn't as warm, not as much curtailment, and so if you consider that Mara have curtailed in August and not so much in September, that's a good understanding why they're able to get the machines working longer hours, producing more Bitcoin. They have got the highest hash rate. They're more than 10 exahash higher than the next Bitcoin miner. At 60.4 is their energized hash rate. That's how many machines are plugged in. In terms of their website, they do disclose that their operational hash rate, so this is the average hash rate that they're able to achieve, is 47.4. So if that is accurate, they've had a stellar month because 47.4 gives them a Bitcoin mine per exahash of about 15.5. And we've already covered CleanSpark and Riot, and their Bitcoin mine per exahash is in the sort of like the high 13s, I think 13.79, 13.8. So if Mara's website's up to date and accurate, they've had a fantastic month. Now, they did in their commentary state about utilization being really high, so we give them the benefit of the doubt for that there. In terms of Bitcoin sold, this is one of the first times I've seen Mara actually sell Bitcoin. So likewise, where we talked about Riot selling more than production, Mara don't generally sell Bitcoin. They've been adding to that hodl from the year dot. And so this month they've announced they've sold Bitcoin. I've calculated at 363 Bitcoin. So that's obviously a significant amount there. But again, these mining companies have a number of levers to raise capital, pay for operational production, and maybe Mara feel it's about time they start using some of the Bitcoin to pay for their production and their energy costs, and gives them other levers to use for other strategies as and when they need it. Now, in terms of efficiency, again, there's only probably 2 or 3 miners with a lower efficiency than Mara, maybe the Cipher, IREN, and obviously CleanSpark we just talked about there, but 19 joules per terahash means that they're going to have a really good Bitcoin mining margin compared to other peer miners out there. In terms of their hodl, that was increased from in terms of Bitcoin hodl, that was increased from 52,477 to 52,850, an increase of 1%. That has a value of over $6 billion, $6,028,000,000, as opposed to $5.6 billion the previous month. Now, again, look at the August Bitcoin hodl value to market cap. That period, it was 104%. So the hodl was worth more than the whole of the company added together. And that was a real head scratcher for me, because they've got over 300,000 mining machines. Yes, they've got some convertible debt, but the 300,000 mining machines and the sites and all the other assets they have, along with the Bitcoin, probably is greater, when you take debt into account, greater than the market capitalization. So I don't think, at that particular time, any premium was given for any of their other services. In September, we've seen again, even though Mara's market capitalization hasn't risen as much as other miners, it still has risen, and therefore you see that hodl value increased, but the hodl value to market cap has decreased there by around about 12%. So that shows you Mara share price performance is outperforming Bitcoin performance, which is great to see.
Keen eye you've got there. That was going to be my point on this next slide as well. So you've taken the time to put together all 3 of these stats in a comparative table. These are really nice. You can kind of see, compare and contrast line by line. Now, I will say these are 3 of the heavy hitters. Another thing they have in common, these are all hodler companies. So unlike IREN or some of the others in the space, these companies do accumulate Bitcoin. They've all accumulated a significant amount of Bitcoin, in excess of about 1.4 billion on the low end. But in terms of the percent HODL market cap, one of these is not like the others. And I wanted to maybe start there, Anthony. We've talked a lot about this market cap, MNAV, Bitcoin HODL, even the DATs or digital asset treasury companies. Why do you think Mara maybe isn't being given the same recognition as their peers here?
I think the overall the overall issue is 2-part. One is again, the Wall Street analysts are not favoring Bitcoin mining as an industry, and therefore not prepared to give it any significant multiples in terms of EBITDA performance. We've noticed that over the last few years. We spoke to a lot of these analysts. We met a lot of these analysts at various conferences and at various sites we've been to. We met probably 30 of them last year when we traveled down to Dallas to the Corsicana and Denton facilities. So we got to get the chance to ask them a few questions. I've seen many of them at various conferences, and always want to ask more and more about how they're valuing companies there. And the issue is that they just don't give the credibility to Bitcoin mining as they probably do to HPC. CleanSpark On the other hand, they are sort of now realizing that they should be pivoting towards HPC. Their share price has increased quite nicely, although, again, it hasn't increased as significant as other miners like the likes of Cipher and IREN, who've been really flying the flag for HPC for probably well over 12 months. Riot, as well, has been flying the flag since sort of September last year. We were there in June when they were categorically a pure play miner. That changed in sort of September, after conversations with one of the groups that were trying to get them to move towards HPC. And we can see now that that move has provided fruits for Riot in terms of, their market capitalization is well over 7 billion now. That again on its own gives them levers to develop capital to raise to complete their sites at Corsicana and Rockdale in the future. But the Mara one is really, I think one of the issues, the second part of the issue is people are probably uncertain about what Mara really stands for. They quite clear we're not a treasury management company, but again they have the largest Bitcoin treasury outside of Strategy, and they even have some of that Bitcoin allocated to increase the returns on their HODL. So again, elements of a treasury management system in place there. They were not going in HPC, but yet they've purchased a significant amount of a company that is a data center operator. So again, what are they really doing out there? Yes, they are the largest Bitcoin miner in terms of that installed hash rate, which is over 60.4 exahash, significantly higher than the likes of significantly higher than the likes of CleanSpark and Riot. But I think there's a little bit of a communication issue in really getting out there and telling the world what they're all about. I think they talk about different things on different days, and people just really sort of wondering. We did a poll on Twitter, and it showed as many people who thought they were a Bitcoin miner equally said they don't know what Mara are. So that just goes to show, I would say they are a Bitcoin miner. They've got, 60 over 60 exahash. Of course, it's their main business. But people out there, probably 66% of people didn't say Bitcoin miner, which is, shows you that there's a communication issue from the company to let, shareholders, retail shareholders understand what their real modus operandi is.
Yeah, it's a good point. And I did answer Treasury just because so much of their market cap is tied up in Treasury assets or Bitcoins, very similar to what you see with a DAT. So I think you're hitting the nail on the head there. The other line I wanted to call the attention to, the improving miner fleet efficiency. So when we started out this channel, 35 was kind of the average. You can now see sub 20 in a lot of cases here. The next slide we're going to talk about is the hash rate index, overall difficulty of the network. So maybe you can spend a minute or two kind of dovetailing the importance of efficiency in light of this never-ending difficulty, global hash rate expansion.
Yeah, we've just seen now the difficulty drop by nearly 6%. It was over 5% 2 weeks ago, another 6%. That's just in literally 2 weeks, down by, a total of, getting close to 11, 12%. Now, when we had the halving in April 2024, rewards dropped by 50% in one go. But I don't think people are expecting difficulty to be even more of a problem than the halving, and it's really proven to be that way. The hash rate now on a 7-day average is well over 1,000. It's 1,066. Yes, we've been great this week. We've seen the Bitcoin price, rally to close to all-time high, only $700 away today, and that's going to give the hash price a bit of a pull as well. But this difficulty is a problem. We're seeing that difficulty is potentially going to drop by 10% at the next turnaround, and maybe that's because as difficulty drops, more miners will come off the network, and therefore it makes it harder to mine a Bitcoin. It's supposed to take 10 minutes. At the moment, according to Lux's chart there, and they're very reliable, it's taken 11 minutes and 7 seconds. So that needs to come down to 10 minutes. Now, it's too early to say. October the 17th is the next change. We've literally only just changed yesterday the difficulty. So we're only on day one of the next 14 days. I expect that difficulty to probably come down from where it is there, where it's going to be a reduction of 10%. Maybe there will be a reduction because you have two big changes upwards, meaning, a lot less production. It means that, some miners are going to be having trouble with margins. Hash price at $51. If you pay more than, say, 5 cents for your energy, you're going to have a problem making a margin when you're covering all the other operational costs that you need to cover. And so there'll be machines being stopped now as opposed to mining at a deficit and waiting, for that difficulty to reduce. And therefore, the increased production might just get you above the profit line. So, last month, if you were mining 100 Bitcoin, you've had two difficulty changes of, nearly 12%. This month it might be 88 Bitcoin. Now, energy would be linear to the amount of energy used to mine each Bitcoin, but the operating costs, the staffing costs, the site costs, they're going to be the same. And if you're only mining 88 Bitcoin and the Bitcoin price isn't dramatically higher than it was at the start, it means your revenues are not going to be, increasing with your costs, and therefore your margins are going to be hit, and you have to make a decision as to whether you continue to mine or whether you turn machines off until it becomes more viable to mine. We've just seen Riot's energy price there go from 2.6 to 4.2. Some of that will be because of the market rate in Texas is actually increased in September. And we'll find out more of that, especially when IREN release their results, because they use market rate and they clearly put on their updates how much the rate was in each month. So, we won't give out any sort of, further understanding to that until we see more information. But, to go from 2.6 to 4.2, yes, some of that is the power sales, but not all of that is the power sales.
Yeah, good point. We're still awaiting IREN's report next week. Anticipated, Mike Alfred says big things are to come, so maybe we'll see another GPU announcement. But this difficulty, it's just a never-ending hamster wheel. And the more the price of Bitcoin goes up, the better the economics for old machines. So if you have access to free power, cheap power, some sort of a renewable power source, people are starting to plug in these older miners, and we're seeing that global hash rate increase rapidly despite the pubcos kind of pausing their expansion. The other point on difficulty, I feel like for the last 18 months, we've been talking 2, 3, 4, 5%. It sounds like a small number, but remember, this is compounding each and every period here. So 5% on top of 5 on top of 5 adds up pretty quick. So as you say, a very difficult cycle for these miners, not even talking about the halving. And again, that's why HPC AI seems to be the route most are taking. With that being said, we'd love to hear your comments in the section below. Which of these three miners are you most excited about and why? Hit the like button, guys. Feel free to subscribe. And with that being said, have a great weekend. We'll see you back here on Monday.